as well. Hi Mayuresh, good afternoon. Well, I was just going through a couple of long-term recommendations that you've identified for us, and one of them is Ipca Labs. I was just asking Ambarish about some of the broader market pharmaceutical names. Ipca Labs has not performed this year at all. It's up just about 2-3%. You expect it to perform next year?
Afternoon, Sonia. Clearly, I think, as you're rightly mentioning, I think the underperformance has been evident because of the FDA ban on 3 of its plants, Ratlam, Indore, Silvassa. And again, only 4 APIs allowed, which accounted almost 45% of the sales. Having said that, probably, I think, do we expect a recovery to probably come through in FY16? Quite unlikely. But then let's roll it over to FY17 and let's see how the numbers stack up. So clearly, I think if you go by the trend that the company is posting right now, the management really expects the second half of FY16 to be driven by 7 to 8% rise in institutional sales. You'll get a lot of these HCQ supplies coming through. And that's probably a very conservative approach or an estimate that we're probably estimating specifically on the institution sales business. Secondly, I think if you look at the business mix per se, the management on the domestic formulations business, which is the cash cow for the company, has basically turned away from the anti-malarial segment, and they're focusing more on the high margin, high chronic lifestyle segments like CNS, CVS, anti-diabetic, dermatology, and clearly I think these segments pose high margins. So clearly I think we're expecting margins to shoot up by 517 to 18.6%. What effectively this means is that with lower costs coming through, with sales improving, with high margin orders coming through, and again assuming that nothing happens probably on the FDA front in terms of approvals coming through, the profitability from FY16, which we expect to come to close to around 169, 170 odd crores, that might see a jump close to 350 odd crores, with margins actually jumping to around 18.6%. Again, I think if some resolution happens over the next few quarters in a few of his plants, the kind of ROE expansion that one might probably see in the stock can be quite tremendous. So clearly, I think valuation is looking attractive. Even if you go by the current run rate, I think we're still expecting good numbers to come through on FY17. So I think one can look at declines with a target of 900.